So I want to talk a little bit about the different types of structure that you can have in your business. So there are several different kinds of ways that you can set up your business. Typically when people are starting their business, they're either going to be a sole proprietorship or maybe they'll do an LLC formation. So some of the other options that you can do is you can have an LLC and elect to be taxed as an S corporation, and you can also have a partnership that is either just a partnership LLC or a partnership that elects to be taxed as an S corporation, and also a C corporation. So we'll talk a little bit about the different types and what they mean as far as tax ramifications of them, and then also the different types of bookkeeping that you should be doing for each type of business structure. When people start out their business, typically they'll either set up an LLC right out of the gate, or they won't do that yet. They'll just be operating as a sole proprietor. So with a sole proprietor, you are basically just running your business as a solopreneur. You haven't set any legal structure around your business, which is what an LLC would be. LLC stands for a limited liability company. Sole proprietorship, on your tax return, it belongs on your personal tax return. It goes directly on there on a Schedule C, and your net income and expenses on the business are subject to what they call self-employment tax. So when you work at a company and get a W-2 for your wages, you have withheld from your paycheck. You've got your federal income tax, your state income tax, which if you live in a state that does have income tax, you also have your Social Security and Medicare tax. So the Social Security and Medicare piece, that's half of that equation. The other half is paid for by your employer. So for your, let's say, $100 worth of wages, you have 7.65% withheld from your pay for Social Security and Medicare, and then your employer also pays an additional 7.65% on your behalf for their share of your Social Security and Medicare tax. If you're a sole proprietor, you're responsible for both of those things, for both halves of that, and that's what's called self-employment tax. So that's why when you have a sole proprietorship, that net income on there, you seem to be taxed quite a bit on that income. 15.3% of that net income goes to your self-employment tax. That's the Social Security and Medicare piece. On top of that 15.3%, you have your federal and potentially your state income tax on that same income. So that's why when people start a business, gosh, this is unexpected. All of this tax, all of this income gets taxed at such a high level potentially. So that's why when you are setting up a business, regardless of the structure, keeping track of your expenses can be so important.